our next technical indicator that we are going to add to the puzzle is going to be the Bollinger Bands. So let's hop right in and start to learn. First, let's go over the basics, the ABCs of things. They were created by John Bollinger. So Bollinger Bands, John Bollinger, hopefully you can see the connection there. What they do, they compare the stability and relative price levels of a designated period of time. That probably sounds complicated. But if you're a math and statistics guy, probably not. They use standard deviations relative to a simple moving average. So maybe, depending on if you've ever taken a statistics class or whatever, maybe standard deviation sounds kind of bizarre to you. No worries if that's the case. The concept of standard deviations is the backbone of this indicator. So it pretty much all revolves around standard deviations. But like I've said before, this is not a statistics and math class. If you want to learn more about standard deviations, you can use that link that you see there, or you can just use the search engines, type in standard deviation, and I'm sure your heart will be filled with all of its desires in terms of what it wants to learn about for standard deviations. But I do want to at least get out there that this indicator is based around its foundation is all rooted in standard deviations relative to moving average. So what have I been saying about the king indicators and how everything goes back to that? Well, here we are again. They're not. It's the indicator isn't even going back to the actual price. It's just going back to a moving average, and then it's using standard deviations off of that moving average. So again, just one indicator coming from going back to another indicator, but not even the price indicator. So it's one of those things where it's all coming back from a source material, but it's not even going all the way back directly to the source. It's just going back to the moving average. Just like the MACD only took moving averages, Bollinger Bands are using moving averages again. So it's just another form or another indicator that are using the moving averages as its driving force. How do the bands operate? Well, let's go over the kind of what functions, what components make up the actual Bollinger Bands, but they use three separate lines. The middle line is known as ready for the really fancy name, the middle Bollinger Band. And what that is the 20 SMA. Now, again, that's standard and default as far as I've seen. Maybe it's different. I don't think there's any maybe about it. Again, I've looked at many different platforms and chart data providers, and every single time if you throw up Bollinger Bands, it always starts out and assumes that you want it at the 20. So that tells me it is the standard and default. So 20 SMA is going to be the middle line of the indicator. But a lot of people just say the middle, the middle Bollinger Band. Well, the middle Bollinger Band is the 20. Now, in regards to the upper line, it is the SMA plus 2 standard deviations. The lower line is the SMA minus 2 standard deviations. So here we have our middle Bollinger Band, otherwise known as the what? The 20 SMA. And then here's 2 standard deviations. Here's 2 standard deviations. Remember, if you're a little bit interested in more of what is standard deviation and such, search engines are your friends. And what the indicator, again, kind of philosophically is saying is that prices do not like to deviate from their norms, or in other words, their average. So prices like to stay within the upper and lower lines. That is what the whole theory, like I said, the philosophy behind the indicator is that prices like to just kind of keep calm. They don't like to, deviate outside of what their normal, range is. And that's what Bollinger Bands are measuring, what their normal range is and how the price is reacting within that normal range. How exactly do Bollinger Bands help us? I think that's a very valid question. So let's talk about some of the areas that they do provide assistance. And really it all revolves around volatility. That's what the Bollinger Bands are trying to figure out. That's what the Bollinger Bands are trying to kind of help us with. So some assistance areas are prices relatively too high or low. And when you say relatively, we are talking about relative to the middle line, which is, again, the 20 simple moving average. So going back to those indicators. Forecast the health of existing trends and whether or not they need to take a rest. So just because something is trending, well, what's the health of the trend? Is the trend getting a little bit too excited, too carried away? And will this need a rest just to be a rest, or will it continue into something worse? Meaning, is it going to just have a nice healthy pullback and just be a rest, or is this rest going to eventually turn into something a lot worse? Bollinger Bands can help with that. How about the overall stability of the stock's price? Is a price getting too overextended? And prices can get overextended in two directions. They can get overextended in terms of bullish drama. It can get overextended in terms of bearish drama. Now, the big thing to note there is just because prices get overextended, it doesn't mean that right then and there the price has to correct itself. It can stay overextended in either direction, but Bollinger Bands will help us, giving us kind of a heads up. Hey, it's looking like the price that's probably a little overextended. So these three areas, how are prices acting relative to an average? What's the health of the trend? Helps us forecast in that way. And then just what's the stability of the stock's price? Not even having anything to do with the trend, but just, is this thing getting volatile, or is it kind of like somebody has lit a match and an explosion has gone off and now things are way too crazy and things need to calm down a little bit? So these are the three different attack points that the Bollinger Band can help us with a chart. So what sorts of things should we be looking for? Candlesticks closing above the upper Bollinger Band. This is a warning that prices are getting too bullish, or in other words, getting overextended to the upside. Again, that is when candles are closing above the upper Bollinger Band. When candlesticks are closing below the lower Bollinger Band, the exact opposite is true. This is just warning that prices are getting too bearish. Bollinger Band pinches, these are warnings that prices are getting too stable and that some sort of excitement needs to return to the stock. So this isn't something you totally freak out about, but a lot of people actually they like to play Bollinger Band pinches. It shows that the volatility and everything has really kind of just left the stock. It's narrowed down, and then the price is going to make some sort of direction. Now, again, it doesn't have to happen as soon as a Bollinger Band quote-unquote pinch happens. A stock can go sideways for a pretty long time, but it is letting us know that, all right, wow, all the volatility has basically left the stock, and you got to think that something's going to happen at some point in order to get it to kind of moving again. And that's what a Bollinger Band pinch shows you. And then reversal candlesticks near the upper lower Bollinger Bands. So think about this. A hammer candle formed near or outside the lower Bollinger Band. Maybe it's time for the price to make a move upwards. Because think about that. It's like we've been doing, layers of the onion. Okay, the first layer, you have a hammer candle. Now, where is this hammer happening? Remember, location. If it's happening at a place where the indicator is suggesting that it's overextended to the downside, okay, hammer candle overextended to the downside, meaning things are too bearish. That means things are getting, out of control in the opposite way. Yet a hammer candle is formed. Maybe the price is now ready to head back up. So we'll see how those act within our case studies here in a little bit. Well, I lied. I thought there was one more slide, but so not in a little bit. Let's hop into the case studies right now and see how the Bollinger Bands, can help us act as an assistance tool. For our first case study, hopefully these are all looking familiar now. You know what we've talked about. We just talked about the MACD influence on it. So now in regard to that, let's add in the Bollinger Bands. And real quick, this line right here is the upper Bollinger Band. Upper to what? This orange line, which is the middle Bollinger Band. And from a moving average perspective, this is the 20 SMA. So we have upper, middle, and then lower Bollinger Band. Again, upper Bollinger Band, upper limit, upper band, whatever best sits in your mind. Then we have the middle band, the middle BB, the 20 SMA, whatever you want to call it, and then the lower BB, lower limit, lower Bollinger Band, whatever you feel most comfortable with. That's what this line down here is. So anything that closes outside of this, so up in this area of, because it's outside of that upper Bollinger, that is considered overextended. Anything that is, down below, out here, outside, that is considered not the norm. It has deviated outside of the normal range of things. Therefore, it would be overextended to the downside. And then anything inside, all right, that's how you would act the price to, or how you would expect the price to be reacting. So now let's put that with where our current situation is. We know about the candle. We know its location relative, to moving averages and supports. And now we add in this. And what is this? Well, it's sitting right atop of the lower Bollinger Band, which means that it's at its lower range of what it normally is. So it's deviated almost to being overextended. So it's sitting right here at what acts as a support portion many times because, it is the lower Bollinger Band. It's the lower limit of what the normal range is. So when prices are sitting right at these areas, then you can expect, and odds are okay, they should be acting as support, and rightfully so. I mean, it's got the hammer candle. You have the 50 periods up moving average here. Another example of that is, look at this. So this candle gapped up, and look where it is right now. It is completely outside of the upper Bollinger Band, isn't it? But then what's happened? Did it just keep on going up way outside? It didn't, because things got way overextended. It deviated way out of its norm, and then look what happened. Went sideways, and then when did it start to go back up again? After this candle right here, after it had gotten well back inside of the Bollinger Bands. Therefore, it was no longer overextended, and then it started to head back up again. So, example there of just, total, this whole candle. Now, this certainly doesn't happen all the time, where the candle is completely outside of the upper Bollinger Band, but you can see it did return back inside, and then upwards it went from there. Now back to our key point right here. We know what happens. The price does head back up, but hopefully you can see, okay, wow, that makes that much more sense, because remember, anything below here would be overextended to the downside, meaning, okay, the price you would think wants to return back up to its quote-unquote norms. Well, the norm is going to be inside of here, and it can go to the upside all the way here before it would be considered overextended to the upside and overdone. So that's a lot of room to run. So you know that it's on its the tail end of its one side of the range, and then you factor in candle that's formed and everything else, and so they're still sitting right outside its lower range. I mean, so this is overextended to the downside, no doubt about it. And then you can see there, look at that. So now it's bounced from the lower Bollinger Band all the way to the upper. Now you got to start to think, okay, it's bounced up here. It's getting into that territory where, all right, it's at its upper range now. We've just went from lower all the way to upper. And sure enough, look at that. It's staying inside. It's no closes up above. It's staying inside of its upper range. Why is that the case? Because, based on the mathematics and its norm, quote unquote, that's how much it's, the normal price movements are. And you can see from there, still staying within. So it's staying, now it's still a good side because it's staying, up at its upper limit, but it's not getting too overextended. There have been no closes outside of that line. And that's what you want to look for. Let's actually see what happens. So it's just staying inside. So what would you expect to happen here now? First off, look at that candle. Let's start at the core of the onion. Kindergarten, it's red. So the open was here, then there was this close. Okay, and then let's look at the shadows. Okay, barely any shadow right there in terms of the lower shadow. But then the upper shadow, yikes. So at some point, the price was way up here. And where is this upper shadow at? Oh, it is outside of the upper Bollinger Band, which means at this point, the price was getting way overextended. So what has happened? The price has returned back inside that upper Bollinger Band, but in doing so, it's also not created that much of a candle. And at this point, I have no idea what's going to happen because I haven't ventured this far into the chart ever. But I would think that given the type of candle formed, where it has formed, the location, again, the location being basically right up at the upper Bollinger Band, I think that there's definitely going to be some sort of pullback happening. The one thing that's kind of some saving graces. Looking down here at our MACD, you can see that it's got some very nice bullish momentum right now. Blue line is above the orange line. All this is taking place above zero. Nice space in between them. So that may be somewhat of a saving grace in terms of what happens. But you got to think after this that the chart is on a high alert for some sort of pullback. So right there maintains itself. That's a nice sign. And although delayed, you can see a temporary spike there and then did pull back. You can see now momentum is running quite low in terms of, and then there is a pullback there. So it essentially all started right here. This was the leading indicator. Now, granted, it did have a kind of temporary little false move here before finally rolling back over a little bit. But notice how all this upwards move and the powerful upward move basically stopped once it got it gapped up here and then put in this candle and then essentially rolled back over. So, but why wasn't I totally faithful, or why wasn't I sitting here saying for sure this thing's gonna pull back? Well, you look down here at the MACD, and like I explained, so an example of MACD working with Bollinger Bands and just candlestick action. So I wasn't planning on that example, but I'll take it. So hopefully that all starts to make sense. They're all pieces to the puzzle when you put them together, and they just kind of look at how they work in conjunction with one another. All right, for this example, we kind of just went through the whole, so shame on me, but that's all right. I don't think anybody's complaining about getting too many examples. So here we are. You've seen this chart numerous times now. So looking at the candle, now let's add in where's the location of it. Well, the location of it is, as you can see, clearly completely above the upper Bollinger Band. I mean, the entire thing, even the lower shadow, is above the upper Bollinger Band. So what is that telling us? That the price is the price overextended, not overextended, or just neutral? If you're saying it is overextended, and you're saying, well, it's overextended to the upside because it's above the upper Bollinger Band, then exactly, this chart is overextended. But it's overextended, and what else? Well, it's overextended, and then you get this nasty candlestick, which we've already established. So now with this extra, so like we've talked about in other videos, why all of a sudden does this chart setup become almost that much more ugly? Because we've added in more context. We've added in new perspective. Our new perspective is the Bollinger Bands, and now now that when prices close above them, it means overextended, let alone the whole candle. That was just the closing price that we were talking about in the slides. But if there's an upper shadow or if there's a lower shadow that's above the upper Bollinger Band, like we have in this case, that's just, that much more overextended. So, the more context we add, the more, or what we want is just, okay, wow, that's very obvious right now. No guarantee that the price is going to pull back, but just going and loading the boat right now with a kid's college tuition right there, that's probably not the best move, and it becomes that much more kind of slappy in the face type obvious, because now we have this nasty candle, which we know about, and it's occurring, right here after or above this upper Bollinger Band, and this is also the one where we have the negative divergence down here in the MACD. So you have a negative divergence, you have a not so nice looking candle, and now you have the entire candle up above the upper Bollinger Band. Wow, that's a lot of things pointing to, there's probably going to be some sort of pullback. And as we have established, there was the pullback indeed, so let's see how it reacts around. So again, comes down there, there's the bounce off of the 200 period simple moving average, and then it heads back up. So again, look at the range that it went. It went from being overextended to the upside, because remember, at one time the price was way up here, and this was a solid green candle. So it was almost like the price looked at the upper Bollinger Band and said, "Whoa, I'm scared of heights. Let's get back to within my comfort zone." And then on the flip side, at one time, the price is way down here, and I thought, whoa, I almost reversed. I'm way scared of heights. I want to get back inside my comfort zone, which is right up here, and that's where it fought back in to get closed. So it closed back within the Bollinger Bands. So two kind of extreme cases here of the price getting way, way, way overextended. But how would we know that it's way, way, way overextended? Well, we now know that because we have a context of an indicator that tells us and talks about, just how much our price is getting overextended. And with the Bollinger Band, you can now look at this and say, oh, wow, that's super over. Now, granted, this candle here, that pretty much already tells us, wow, that was a, well, I take that back. It does not tell us anything about it being overextended. All the shadow is telling us is that there is a super large amount of drama. But as far as, was the drama overextended? Because think about it, this candle here could have been formed up here, and it would have been within the Bollinger Bands. So, but in this case, we now know that, wow, it was not only super huge amount of drama, but at one point this drama was getting way, way, way overdone, overextended, too much drama, and then that's, one of the reasons why it snapped back. So, again, with Bollinger Bands and the indicators that show overextended or under, now we can not only know, okay, yeah, that was a certain amount of drama. We can know whether or not that amount of drama was actually overextended or not. And in both of these cases, drama way overextended to the upside. So bullish drama way overextended. Too much bullish drama. Too much bullish. Price needs to return to reality. Here, too much bearish drama. Too much bearish drama. Price needs to return back to reality and quote unquote the norm, which is again between the two Bollinger Bands. So looking at this one, if you remember, this is the one where, I was kind of, especially when you look at the moving averages, not exactly trending. But when we throw up our support levels here, now let's kind of take a look at it. I want to get that support level up there again, but look at where our candles form. So we know that, okay, it's a indecision kind of bottoming type reversal candle. But look where the lower part, the lower shadow actually bounced off of. Basically right off of that lower Bollinger Band. So what have I said before? It can act as a support, and here, sure enough, again, acted as support. Going back through the history, you can actually see here. So again, here we'll have a little quiz question since we just talked about it. This candle right here, what is this lower shadow telling us? It's telling us the what of drama, the amount of drama, the range of drama. But what is the Bollinger Band now telling us? It's telling us more about the drama in terms of, was the drama out of hand or was it all still well within range? Right here. Huge amount of drama up here. So a big range of drama, and then it came down here. But did any of this drama ever get overextended? As far as the Bollinger Bands are concerned, absolutely not. It happened pretty much right in between this range. However, when the price was way down here, yeah, there was a lot of drama, and on top of that, you can tell that there was some overextended drama. Here, amount of drama, it's relatively big. Not a huge shadow, but still, this is a long lower shadow, especially compared to the upper shadow. And look where all this happened, outside. But on that note, I also want to point out right here, actually two locations. Look at this candle, big authoritative candle, closed well below the lower Bollinger Band. So things are getting overextended. But just because they're overextended doesn't mean automatically that the next candlestick that forms is going to bounce back up. Here, basically the whole candle closed below the lower Bollinger Band. But then notice what happened. Got overextended more, and then it did correct itself, which, the price has the tendency to do. It will correct itself. But sometimes it can remain overextended. I mentioned that during the PowerPoints, and I want to mention again. Prices can remain overextended longer than what a technical indicator says they should. Remember, the king boss is the price. If the price says, look, I want to remain overextended, the indicator is just, well, I guess the indicator is going to be wrong in this situation because, the boss of things, the actual price itself, says, I want to be overextended. And that's what happened here. Price is here, I'm overextended. But then the price the next day says, what, I want to stay overextended, and in fact get overextended a little bit more. And then it finally did correct, you can see very powerfully here. But same thing here. Price saying, I want to be overextended. What, I want to be overextended some more. And then right here, things finally, corrected themselves. But here, corrected themselves very quickly, and then here didn't even get overextended. It was thinking about getting overextended, but you can see literally bounced right off the lower Bollinger Band and then, formed this candle. So let's see how things unfold, although we already know it, but now it should make that much more sense why the price is about to head back up. It's at its lower range, and before it would be considered even overextended to the upside, you can see it's got quite a bit of travel distance until it's up there, and until it would be, like I said, where things would be in the opposite direction of, all right, things are getting a little too bullish right now. So there, So it literally came down here, bounced, and then the bounce carried into, that session. And then we have that. So what is that telling us now? Authoritative candle. Now, there is some big drama, and the Bollinger Band is saying, hey, I think this drama is a little overextended to the upside. So be wary of that. Things are, the price has now acted a little bit more bullish than it's used to in regarding to its norm. It has deviated a little bit more than what we would like it. So if you picture this as kind of a guard dog, the guard dog is now barking, saying, hey, this has deviated much more from the norm than what it usually does. So, be wary. So right here, you can see it's now starting to correct itself. Granted, it still is above the upper Bollinger Band. And then look at that. Pulls back inside, has closed below it. So now the price, now the guard dogs have stopped barking. All right, price is no longer overextended. And then you can see it pulls back and then heads back up. Did you notice to where it pulled back to? Pulled back to its normal area. What is that? This yellow line here, or excuse me, I take that back. Never mind. I thought the yellow line was the middle Bollinger Band, but that's the orange one. So I take that back, and now look at that as it bounces back. Now the lower Bollinger Band tends to act as support. Support there, support there, support. Support here, support here, support here. The upper Bollinger Band can tend to act as resistance. So right there, resistance, resistance, resistance. Although I didn't quite hit it close enough, resistance. So keep that in mind too. Upper Bollinger Band will tend to act as resistance. And you can see that it rejected it there. But by rejecting it, it's just kind of saying, yeah, you probably should be rejected, because if you go beyond this point, I'm going to start barking like a guard dog, because I'm going to let the person on the stock chart, my owner, know that, hey, you are deviating much more than you normally would. But here there is no barking required. The price stayed within it. So it's kind of like if you run up to a fence and then all of a sudden you have these guard dogs sitting there looking at you saying, hey, if you come over here, we are going to bark. A lot of times people just turn around. That may be the most, or the terrible analogy, but it just came to me now. So either ignore that or you can go with it. But the price approached the fence. They saw the guard dog sitting there. No thanks. So it retreated back. Temporary got above it and then started barking. Okay, that's a bad idea. Came back down, closed with inside. Again, saw the guard dog sitting there. Said, yeah, that's good for me. I'm going to come back, and retreated back. So there's another way to picture of it. Maybe if you're a dog lover or something like that. Our next example here, I just left the support and resistance lines that we've drawn from previous videos. But again, if you're going through the process of things, the onion, with the core, what type of candlestick, okay, then when you start talking about location, oh, look at this. Look at the location now when you have it relative to the lower Bollinger Band. So first off, the lower Bollinger Band suggests that the price is, below it, overextended, but it can also act as a support. So now not only do we have the 50-day simple moving average acting as support, not only do we have this area of support right here, we also have a little lower Bollinger Band right here, which can act as support. So in other words, we have all sorts of supports sitting right here at this area. Not to mention down here, you look at the MACD, this blue line here starting to curl upwards. So hey, maybe that's signaling that this downwards momentum is going to start to run out. So lots of things going in the bull's direction. And I'm not going to spend much time here because hopefully you're really getting it in terms of lower Bollinger Band. All right, things are getting a little too bearish. So when you think things are getting a little too bearish, and then all this bullish stuff starts to happen, that's a good sign that the price is getting ready to possibly head up in the reverse direction. And then right there you can see the price makes its nice move. So right here the guard dogs are barking, hey, this is overextended right now. Authoritative candle, yes. But just looking here now, so it's overextended, not hugely overextended. What would I consider hugely overextended? Hugely overextended is when the lower shadow is even above the upper Bollinger Band. But right now we just have the upper shadow and the close that's above the upper Bollinger Band. It's not like the entire candle itself is above it. And besides that, authoritative candle combined with MACD, momentum growing. I can't remember what happens next, but I would say that this could very well easily remain overextended just because of those things that I've talked about. So they're still overextended. Again, would not be surprised to see it overextended again just because it's not totally overextended. The lower shadow is still within the upper Bollinger Band. Momentum down here on the MACD is still increasing. Well, now we have this candle, which is telling me, all right, kind of a hanging man type candle. Looks like gas is probably running out of the tank a little bit. We'll see. All right, well, this candle, hopefully now, the sirens are going off saying, yeah, probable pullback here, and then there it goes. Why probable pullback? Well, hopefully you're saying, all right, look at this long upper shadow, and given that this type of candle has formed up here at the upper Bollinger Band on top of 1, 2, 3. So on the fourth day of being overextended, so fourth day being overextended, you get this sort of candle formed, and you can see right here, though. Actually, so remember, this is the fourth day of being overextended when that candle was formed, and the MACD, I guess never mind. I thought the MACD had flattened out more, but that's right there. The next day is when it flattened out. So I was going to say, so that's a signal that momentum might be running a little bit low, but it shouldn't be shocking to see that it did pull back after this sort of candlestick formed. This very powerful candle, this very powerful, this starting to run out of gas. But then this, all right, this is no longer some bullish authoritative candle. It's actually a bearish candle, and a bearish candle forming when things are already getting too bullish, too overextended to the upside. Yeah, you could see a pullback, and that's exactly what happened. For this example, not going to lie, I'm pretty excited about this because it does show, the power of Bollinger Bands. So if you remember, this is our one nasty candle where it had closed down here, and then this next period opened way up here, made a little move up, and then just headed. Actually, I'm going to get rid of these right now, just try to so we can focus solely on the Bollinger Bands. But anyways, opened up here, and then gapped way up, and then just a nasty authoritative candle. However, maybe you've been questioning, well, you know what? The next day, it was bullish. I mean, it had this nice green candle, and it was a pretty authoritative candle. However, now that we have the Bollinger Bands in here, what is it telling us about this next, quote-unquote, authoritative candle? It's telling us that what? It's still overextended to the upside. Despite how just brutally ugly this day was, look at that. The lower Bollinger Band was still outside of the upper. So this candle, believe it or not, was still overextended, even after the nastiness. Again, look at that lower shadow. You can actually see that, upper usually acts as resistance, and resistances become what when they are broken? Supports. So here's an example of the upper Bollinger Band turning from resistance into support and bouncing the price up. So even after this nasty day was formed, it was still overextended. And then you get this candle. So you're thinking, well, maybe it's ready to bounce. That it was a nice green candle. And yeah, it could bounce. However, are things really in your favor of bouncing? Well, first off of, coming right after a nasty like this. But then when you look and say, oh, wait a second. The upper close is still above, or the close here is still above the upper Bollinger Band. This, candle is still overextended. So when you know that it's still overextended and has still deviated more from where its normal range should you be surprised when it pulls back inside of the Bollinger Band and then eventually goes back down? It should not be that surprising. So, yeah, that was a green candle. Yeah, it was somewhat authoritative. The momentum was starting to increase a little bit. But remember, yeah, momentum's increasing, but it's not like momentum's increasing when the price is within the Bollinger Bands. Momentum was increasing and it was still outside. So, yeah, it may have stayed overextended a little bit, but should not be shocking at all to see that the price ended up pulling back inside and there was no follow-through of this candle. It just came right back inside the Bollinger Bands and returned back to its normal area. So, hopefully that's all starting to make sense and how this Bollinger Bands can be very powerful. Because think about it, until then, or until we had Bollinger Bands on here, there was, actually, let's just do this real quick. Let's just get rid of the upper and that. So before we had Bollinger Bands, it looked like this. Kind of hard to tell. All right, yeah, you had this big nasty candle, and then you had, this green candle right here. But now when we add that upper Bollinger Band back in, okay, that makes more sense. It's still up above this, so therefore it's still overextended, which means that, the price, more likely than not, wants to return back to where it feels comfortable, and it feels comfortable within these ranges, and that's exactly what happened. So a nice little kind of example of how Bollinger Bands truly can add in another degree of assistance to your your trading. All right, for this example, this is one where we have not mapped out any supports or resistances. So as I've noted, in the spirit of still talking about supports and resistances, let's talk about some of those. So in terms of where are some areas of want, where are some past areas where you can see a lot of price history with the chart. And what I see in this area right here, and this is gonna be give or take, but again, if we use our dots, you can see directly hit it there, and then you had a low hit it, a low hit it, a high hit it, a high hit it, a high hit it. Now, why would a low matter? Well, remember, at this point it was a resistance. When the price broke above it here, it became what? A support. And sure enough, that back test acted as support. You can see right there on that candle, when it did break through this area of support, price really fell. And then when it came back up, look at that. When the price broke above this level, big move up. When it came back down, acted as support again. And then again, when the price fell below it, very nasty day. Price tried to bounce back up, and right here you can see acted as resistance. And actually right there got well within the range, acted as resistance, came back down, and then after this large move up, acted as resistance. And then resistance again, and when the price got above it, you can see the big move followed. So all sorts of good Bollinger Band examples even within this, but we'll get to those in a second. We're just talking supports and resistance. Sorry, I'm getting excited and want to talk about all these other great examples. So seeing all that history, that's why I would put that support right there. And then look at this, voila. Nice doji candle happens. I mean, so just look at all the things that are aligning in the bull's favor. So you have a doji candle, which is a indecision candle. So an indecision candle happening in what direction? The bearish. So this candle is saying, do we really want to be bearish anymore? And now when you factor in that it's happening around this area of support, and where else is it happening now? Down here at the bottom of this the lower Bollinger Band. So it's already telling us, wow, things are getting overextended to begin with. Should it be that shocking to see that it makes this upwards move? Hopefully you are not shocked. But that's going to be one area of support. Next area after that, if we're just looking at kind of this longer scheme of things, so what I'm debating here is, you can see we have this set of lows, which is kind of this set, but then we also have it where it's dropped down that low and then dropped down that low. So to split the difference there, I would call the next area of support right around this area right here. Again, this is getting kind of, you could put it up there, because I mean, you see, look at all those lower shadows, but then you also have some that come down here. So I'd probably put it right around that area. Those would be areas of support. Now in terms of resistance levels, let's talk about a couple of those. So let's see, previous high. Where do you see anywhere on the chart where there seems to be a lot of, every time the price gets up there, there's a lot of give. And what I see, I mean, look at all these times up here. So the price got up right around this area. Not much greed here. Give. Price falls back down. Price gets up to this area here. Give. Knock back down. The bulls attack the bear's fortress right here. Again, give. Price gets knocked back down. Right here, price gets right up into that web. Attack, gets knocked down. Again, right there. Attack, get knocked down. So for whatever reason, this area of resistance up here is pretty darn stubborn and has really established itself as a key area of resistance. And then let's zoom back on the chart some more. See if we can get some other. So another area of resistance just by looking at previous highs. You could put another level right there. Why would that be a level of resistance? Well, let's look back through the history. You can see here, knock down the price, here, knock down the price, and then when the price did break above that level right here, you can see a very big move followed. And then on the pullback here, it acted as support temporarily before the price sank back down. So that would be another area of resistance. And let's map out one more, just because if I remember right, this one goes on a pretty big upwards move. Next area of resistance, this is definitely kind of a tricky one. Well, not tricky, because you could put one there. You could put one at the high of that candle. You could put one at the high of that candle, which is right there. So high of this candle, that candle, or that candle, that would all work. Or you could just say, you know what, I want to put it up there at the very top. It's more of what do you feel most comfortable with. So for me, again, I'm going to split the difference. So we had, that one here, that one up as high as that. So I'm just going to use the high of that candle right there. That would be the next area of resistance that I would put. So let's zoom back in now and figure out what happens with this. So getting back onto the topic, oh wait, I want to talk about those other examples. So look at the Bollinger Band examples here. First one right here. Look at this. Beautiful hammer candle, but look where the hammer candle has formed. It's formed essentially completely below the lower Bollinger Band. So it's getting way too bearish. However, now we're having this possible bullish candle form. So not too shocking that the price moves on up. Here, again, kind of like our previous example, a big gap up and then a nasty, nasty day. However, look at this next candle, green. So without Bollinger Bands, you may be thinking, okay, this thing's ready to, return right away. Well, even after this green candle is formed, it's still well above the upper Bollinger Band, which is still telling us overextended. And then we have this candle with this long upper shadow, which then, of course, does pull it back inside the Bollinger Band. And then after it gets there, it kind of chills out and then finally heads back up. And you can have more confidence in this move back up because it's happening within the range. So on that note, let me ask you this. Why does this candle become that much more powerful? We've already established that it's powerful because we've had the MACD crossover. We've had it where it's busted above all of our moving averages. I don't know why this line stops not showing up, but we got our 200 period back. So remember, this is the candle that busted through the 200 period, busted through the other Godfather moving average. And, on top of that, on top of the MACD bullish crossover, we have the nice volume. So a lot of things going for it. But now what else does it have going for it? Is this candle happening above the upper Bollinger Band? Nope. Did this candle close above the upper Bollinger Band? Nope. So what is that telling us? That's telling us that this is a very powerful candle and it's all happening within a range. It's not like it's it's not overextended. The candle, despite how powerful and authoritative it is not even overextended. So now we can like that candle that much more. I mean, we already like it because of the type of candle it is in and of itself. We already like it because it had nice volume on the formation. We already liked it because it just busted through all sorts of moving averages which act as resistance. And now we can like it that much more because it's not even overextended. Usually candles like this are, getting themselves into overextended territory, but not the case here. So let's just go through it, and then you can see, as you know, that the price does eventually head up. But should we be that shocked that this candle was a leading indicator to this future upwards move? Absolutely not, because, like I said, for all those reasons. I mean, there's a lot of good things going for it, and I should note, in terms of resistance levels, you can see. So at this point right here, how do we know that this candle was powerful? Well, first, it converted this area of resistance into support. Remember, resistances become supports. And on that same day, it also converted this area of resistance into support. That's a good sign. And then look at this. So it is not a coincidence why this upper shadow formed where it did. Why do I say that? Well, two fronts. First, it was getting what? Overextended, right? When the candle was up here, like it was at some point during this formation, it was above the upper Bollinger Band, therefore overextended. On the other note, look at where else it was at. Right up here, pretty darn close. Now, granted, it didn't hit that area of resistance exactly, but I think we should all be able to agree that it was well within the web of this area of resistance. So is it that shocking to see that that is where this candle stopped forming and then got knocked back down? It should not be. And then knowing that it formed right there, should not be shocking to see that it pulled back. And look at that. What happened here? Remember, this was an area of resistance. It turned support. And because it turned support, looking for a back test. And look at that. Classic example right there. Pullback, resistance, turning into support. And then, a move happened back to the upside right there. And it went back up. And look at that. Got rejected temporarily by this resistance again. But then finally got above it before dropping back. And look at that. Look right where it found support. Again, right here at this level. So just, good example of how this resistance did indeed, not once, but twice, turn into support, and maybe more times. Let's move on to our final example. before we even get into it, I gotta point out this example here. So check this out. Look at this nice little hammer candle. Bottoming candle, indecision candle, reversal candle, whatever you want to call it. Look at its location right here near this lower Bollinger Band, and then a very nice move upwards. Same thing right here, basically same type of candle, and you can see the next day got a gap up relative. Granted, the gap up turned into a massive bearish candle, but the price definitely returned back up to its norm area and then closed down here. So a couple nice little examples of, keep your eye out for those candles, for the type of candlestick formed, and where is that candlestick forming relative to the Bollinger Bands. And then finally for this example, this is, I'm not going to say a bad example, but it's just one where we know about the candle. This is the one where, looking back at the history, this was where the stream turned bullish and then rolled over. And then if we look at the other history right there, turned bullish and then went bearish. But with this one, there's nothing overextended per se. What I will say though is that, actually look at that candle, completely closed above the upper, and then the next day sucked right back in. Here it did temporarily get up above, but then did close. So it's not overextended. It is in the upper portion of what its quote unquote norm is, but that doesn't mean anything because stocks can stay well within that range for as long as they want to. But so as far as Bollinger Bands, yeah, I mean, all it's really telling us is that the upper Bollinger Band is a pretty sturdy area of resistance. I mean, you look at it, resistance, resistance, resistance. So there must be some pretty scary kind of guard dogs on the other side of this fence over here. Maybe these three candlesticks heard about the story that this candlestick told, because I mean, this candlestick did get above the upper Bollinger Band, so they have some experience of being overextended. However, their experience being overextended, was very shortly lived as the price got sucked back down. So maybe this one went back and say, hey, listen, fellas, you don't want to cross the fence. Just stay within the norm. Don't deviate too much. And that's potentially what's going on right here. And then we do know that it pulls back. Look at that, acted as resistance again. And then I'm curious, how does it react? So right there, lower Bollinger Band acts as what? A support or a resistance. Hopefully you're saying lower acts as a support. Sure enough, look at that. Price came down, bounced nicely from there. Acting as support again right here, although the price is getting pretty close. Acting as support again, just hovering right there around that lower Bollinger Band. Okay, so now we have a hammer formed at this lower. Maybe we're going to see some sort of upwards move. Of course, confirmation is always required. So hovering around the little lower Bollinger Band. And just no confirmation. Now it's getting sucked downwards. And you remember, though, that this one rolled over. So I wanted to point that out. Just because, a candle like this forms doesn't mean you throw the kids' college tuition right there. You got to get some sort of confirmation. And as you see, there was never really any sort of confirmation that came, and it just got sucked downwards. But this one example, or I'm not going to say that the Bollinger Bands were worthless in providing assistance, but sometimes the Bollinger Bands are just saying, yeah, the price, it's in its upper range, but it hasn't deviated to the point of being overextended. I mean, if anything, this one told us, like we said, it's tried multiple times to get overextended, but every time that upper Bollinger Band has knocked it down. But besides that, yeah, not too much that this one's told us, unlike other ones where you got a nasty candle. Whereas if this example, if I use that, then we could be saying, okay, wow, nasty candle, look at that upper shadow, and then this long upper shadow says selling return, but it would make sense why selling and the giving of shares would show up, because it is completely above, it is overextended. So yeah, okay, that makes sense. So that would have been a good example for this one, but based off of this one, as we've been using, yeah, not that much to see, but still, I don't want it to come across like every single stinking chart you look at, the Bollinger Band is going to be oh wow, yeah, this is the Bollinger Band is so much help. I mean, sometimes all the Bollinger Band is telling you is that, yeah, it hasn't deviated, and that's fine. So but that's going to wrap up this lesson. We now have another tool where you can try to find overextendedness. It's another area of support and resistance. So just another tool in your tool belt. You can now add another piece to the puzzle, and just have that much better perspective when you're looking at charts.